This is the Southside School of Financial Freedom watch list and market report for the week ending April 29th, 2023. Our question this week is, what is a fear trade? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 0.8% on Friday and was up 0.86% for the week. The S&P 500 increased 0.83% on Friday and was up 0.87% for the week. The Nasdaq increased 0.69% on Friday and was up 1.28% for the week. Looking at the week, we can see that there were 9 up finishes versus 6 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. On Tuesday, all the major indexes finished down. On Wednesday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Thursday, all the major indexes finished up, and on Friday, they all finished up again. New unemployment claims were 230,000. Long-term U.S. mortgage rate rose to 6.43%. The Fed key inflation rate rose 0.3% in March. The U.S. GDP rose at a 1.1% pace in the first quarter. The House passed a GOP debt limit bill, and the FDIC is said to be preparing to place First Republic Bank under receivership. New unemployment claims, mortgage rates rising, inflation moving higher, the U.S. GDP rising at a 1.1% pace in the first quarter, the House passing a debt bill, and the FDIC preparing to place First Republic Bank under receivership are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a fear trade? A fear trade occurs when investors buy safe assets and sell stocks and other risky assets. Investors move into cash and or buy U.S. government bonds. Fear trading may cause investors to make irrational decisions. They may sell stocks prematurely and miss out on big gains. Usually, economic turbulence like inflation, a decrease in GDP, supply chain disruptions, major adverse weather or political events, and or noted shortages of important commodities. There are 4 trading fears: the fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. Fear trade in the market is usually characterized by an increase in the dollar, a decrease in U.S. Treasury interest rates, especially the 10-year U.S. Treasury bill, and a sell-off in the stock market. These 3 events indicate that money is leaving the stock market and going into U.S. bonds and or cash is staying on the sidelines. When fear hits the market, what do? Do you forget everything and run, or face everything and rise? Have you ever realized and or experienced a fear trade? Have any of your stocks been affected by a fear trade, or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending April 29th, 2023. The strongest performer on the list this week was Riot Blockchain Incorporated, ticker symbol RIOT. It's in the third column. It was up 1.01% on Friday and increased 13.69% for the week. Riot Blockchain is a crypto mining company that primarily focuses on Bitcoin and general blockchain technology. Riot has deployed approximately 8,000 application-specific integrated circuit miners at its cryptocurrency mining facility. Through its subsidiary, the company also seeks to develop a blockchain-based escrow service for wholesale telecom carriers. Looking at a summary of results, you can see that Riot has increased almost 253% year to date. I generated cash flow from Riot Blockchain this week, and I have in the past as well. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing in or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 ETF SPY. The Southside Portfolio is up 27.54% versus 8.76% up for SPY, a difference of 18.78%. The Southside is beating SPY by almost 19%. The cash flow generated by the Southside Cash Flow System for this week was 2.51% of the portfolio account value. The account value changed by 14.02%. Meanwhile, the S&P 500 ETF SPY changed by 0.9%. Bitcoin Watch. Bitcoin gained 7.29% this past week and appears to be on the verge of a bull market, though it is down more than 57% from its all-time high, which was achieved in November 2021. It is up more than 77% year to date. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $56.34. You can get more details, including the total dollar amount of cash flow for the week, on the website, southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists levels 1, 2, and 3, and they are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.